Hey, what's going on, people? Joshua Malloy coming in. It's Saturday, April 15th at about 5 p.m. Cheers. And we are going to be tapping into some epic trades that we did last week. And I can't express how proud I am of the success that we had last week. The amount of discipline that is required in order to be a day trader. It's very, very simple stuff, but it's easy not to do. And what we're going to be going over today are some of those disciplines that are required of you in order to be a profitable trader. And a couple of those things, for example, journaling your trades, knowing where you are in the market and why you decided to even get into the market. Journaling is a very important and pivotal thing in order to track your progress as a trader throughout your career. Because if you don't track your losses or your wins, you won't understand why you did what you did five five days ago, 5 weeks ago. So, fast forward to the present and you're still making the same mistakes, or you're making the same right calls, then you can't go back and figure out why you're successful or why you're not being profitable. So we're going to be talking about journaling. Another thing that we're going to be going over is the psychology of trading. So let's say you're already in your trades. How are you thinking? How is your psychology when the market decides to go in the wrong direction for a little while? Maybe the trade that you're looking for to take place, your bias is going to take 1 or 2 days for it to actually happen. So the first day one, you're down a couple $100. How is your mental through that process? So we're going to be going over that today. Let's go ahead and tap into these charts and get active.
All right, so we're just going to go ahead and jump right into some of the pairs that I traded this week. And as we go, I'm going to explain some of the wins and losses that took place throughout the week. Overall, last week was a net positive, which was great. But there were certain decisions that I made from a psychological standpoint that if I would have avoided, that net positive would have been drastically higher. So that's what we're going to be going over. So the first pair that I got involved with was USD CAD. As you can see here at the top, we're in the weekly time frame. So pretty much for the whole span of last week, we're in a downtrend. And if I were to show you my journal, every single one of my trades for USD CAD was in fact a sell. But the problem here is let me see. So if I open up this tool here, which is my selling tool, and I want to highlight the week. So let's go ahead and all right, so let's highlight the week, the box. So that is the week right there. And just to give you an idea of my trading with USD CAD, I got into a sell at 135, 1.3516. So right here. Wanted to take that down. I got into another trade. 135, 134,985. I'm going to explain why this is such a problem for most traders. And, I fell victim to some of it this week as far as, the psychology piece. And you'll see why in a second. So I have two more trades that I placed. 134,749. 134.749 right there. Let's place our stop loss up here and our take profit down here. And then last but certainly not least, 134.692. 134.692. I made all of these trades, guys, and ladies and gentlemen, and I manually got out of all of them except one. I'm currently in profit on one. I held it over the weekend, but all the other three trades, I ended up getting out early and taking a loss. And that's the lesson here is that when we have a set of rules that we have established, it's very, very important to just let your trades run its race. Because 80% of the trades that I took this week that were losses were actually correct. They were going in the bias that I anticipated. But I decided to get out of those trades early because for some reason I didn't want to absorb that loss. But if we were to just let those trades run, every single one of those trades would have ended up in profit. So the biggest thing here is, understand that like when you see your confirmations on the chart, like you see your supply and your demand, you see that it is a downtrend. You also see that price broke out broke out of a previous support right here, and then broke out, retested the area, and then proceeded down. This whole time, like after I saw that retest, I should have maintained those trade positions, and those they would have all been in profit, every single one of them. So when you have your rules in place and you see your confirmations, let your trades run, and that will save you some stress. All right, so USD CAD, wonderful, wonderful, wonderful placements on every single one of those trades. I have one still floating in profit, holding it over the weekend. So we're going to see how far that one goes. I'm anticipating it to at least come back down to 132,900. So we'll see how that plays out to start off next week. The next pair that was actually that went really well was GBP AUD. Okay, so GBP AUD, we'll get into some technicals here as to why I got into this. So USD CAD, we talked about, holding your disciplines, maintaining, the right mindset and psychology when the market is not going in your way for a brief moment doesn't mean that it won't turn around and ultimately go in the direction you anticipated. That's what we talked about on USD CAD, sticking to your disciplines, okay? And the only way that I would have realized this is by journaling, right? So you have to set up your journal so that you can log every single one of your trades and see where you messed up and see where you did well. On GBP AUD, we're going to talk about some technicals though. So on the weekly time frame, and I talk about this on my course. So if you have not joined the course and want to learn more and get involved, make sure that you send me an email or a private DM on my Instagram, and we can go ahead and talk about the services that are included in and pretty much what you will be investing yourself with for. So here, weekly time frame, I created my high and my low. You can see with this red line here, it has a W to represent the weekly time frame and the weekly range. Dropping down into the daily time frame, you can see that price tapped into this line here 3 times, but ultimately closed below the line. So that was my initial confirmation, is that price was running out of strength going to the upside. It was also with these spikes to the upside here This was also liquidating any stop losses that were held above it. So any retail, your regular traders, they see this spike here with this candle. And what they would do is that they would get into a sell. They would place their stop loss just above this one right here. They would place their stop loss just above that. So these two candle wicks ultimately liquidated a whole bunch of trades and took their money, creating more strength to prepare for that downside move that took place. So we have a confirmation of a couple of retests to the high of 186,800. You have liquidation of stop losses at the top side there. We drop down to the 4-hour time frame. You can see that price actually broke below a level of support. The support line is ultimately right here. So this move that broke to the downside was ultimately a signal for a sign of strength to the downside. Okay. So once that took place, I wanted to see a retest in this area of liquidity. And when I say liquidity, I'm talking about these skinny wicks that are at the top of these candles. Go ahead and remove this. So I wanted price to come back into this area where the initial push down happened. So usually what happens when financial institutions actually break for a strong move, what it will do is that it'll come back up and retest the area where it started. And the reason why is because banks, financial institutions, hedge funds, what they do is they don't just put sell positions in when they want it to sell. They also put buy positions in at the exact same time. So what that means that when price comes back up and retests an area, the only reason why they're doing that is so that they can break even on their buy position. So like I said, when this first move went down, they put buy and sell positions in at the same time. But at this given moment, there were more sellers than buyers. So we had your push down, and then when price decided to retest into this area, this is the opportunity for those financial institutions to close out their buy positions so that they can break even or at least minimize their losses, ultimately wanting to push to the downside at the very end of the day. So this is a great trade that took place. Like I said, if we drop down to the hourly time frame, we can see a little bit better that price initially had a push down right here. This is what you call an impulsive move. And then from there, you don't get in while the move is happening. You want to wait for the price to retest that area where it left from in the first place. So this area right here is your supply zone. This is your supply zone. And the way that I determine supply zones is through a couple of signals, right? So with these two candles right here, this black one and then this blue one is an engulfing candle. So it completely engulfed the previous black one. So that is a sign of a bearish move. Here, the exact same thing. This blue candle completely engulfed this black candle that came before it. So that was another signal. You have your impulsive move, breaking below support, pushing below all barriers, and then ultimately coming back up to retest. Once it got back into this zone, into the supply zone, it impulsed again with a strong engulfing candle. So even if you were to get in on once this candle closed right here, you would put your stop loss above this area, and then you would write it down for, again, I'm still looking for this to go down lower. So this would be at least a 2-to-1 reward to risk ratio, which is good risk to reward to risk management. So Just a quick recap: engulfing candle. You have an impulse breaking below support. Price came back up and retested the general area of 186.5 and 186.800. 186.5 is a nice round number. You would call that a psychological number. A lot of institutions like to use round numbers like that as points of reference to retest and also break out. So if you pay attention to these price areas, you could potentially find what I mentioned earlier, which is a supply zone where you can potentially to get into it for a buy or sell and make profit in the market. So this is a great trade. And last but not least, we had Euro USD. This was an excellent trade. Ultimately, we used the Fibonacci retracement tool to locate a solid point of entry. When we talk about the Fibonacci tool, a lot of people utilize the 0.618 price fib retracement level as the quote unquote golden area. But in my opinion, because financial institutions like to overextend and liquidate stop losses, like we talked about on GBP AUD, price likes to peek its head over the ceiling, or um, they like to penetrate above the ceiling so that they can take anybody that had a stop loss above the high, giving itself more momentum. So the 0.78 is actually a really good rule of thumb of where you should enter your trades in, rather than the 0.618. 0.618 still has room to go down a little bit lower. So what I did here is that I took this low right here, and then I put my the top of my fib retracement tool at the top right here, right before a correction started happening. A correction is this move right here, is this right here. Okay, so I put the top of the fib right here, bottom of the fib started right here. Ultimately, you can see that price retraced back down to the 0.78 level. On top of that, it also came back to this level of demand where price pushed off initially and ultimately wanted to start creating higher highs. So we made an excellent trade here, placed an excellent position here, and we just let it ride out. Took profit at 109.750. Price decided to continue to go higher. We do anticipate it to reach the next weekly range. In this case, it would be 111,200. So we're looking for it to go a little bit higher. We currently have a correction in the daily time frame. In the weekly, this is actually a continuation candle, so we should be looking for price next week to maybe make a small correction within this candle and then push higher. All right, so I hope you found some value in the technical analysis. I hope you found some value in the importance of journaling and logging all of your trades. In the next video, we're going to be talking about, once again, we're going to be doing a recap. If you're not involved in the monthly subscription where you have live access to me during the New York session at open for 2 hours. If you're not part of that subscription service, then you will just continue to see these updates after the trade has already taken place. But if you want access to real-time information when I'm actually getting into trades, then make sure you reach out to me to start your subscription. You'll also have access to me for Q&A, one-on-one interaction during our Zoom chats, and just plenty of other services that can help you increase your odds of being a profitable trader in the stock market. So thank you guys for jumping into the video. I appreciate you all, and I look forward to seeing you all just start collecting your bags and making your money. I'll see you on the next video.